Welcome back. You're watching Big Deal. Let's talk about the private equity and investment space that we had been discussing. Ashley, I want to come to you on ChrysCapital's performance that has been really remarkable. What is it that has worked for you over the years in terms of the kind of investments that you've chosen? Because the sectors clearly remain the same. IT, consumption, pharma, you know, it's the same that everybody is really investing into.
We look at certain things at the time of investing which can help us from an exit perspective. Obviously, all of the macro stuff, specifics about the company, management. I think partnership with an entrepreneur is something that we feel very, very strongly about. You know, you want to have a very good relationship and understand the entrepreneur and sort of your partners with the entrepreneur for 5 years. So you want to have a good relationship both in good times and in bad times. I think so. Selection of companies is driven by some of these factors. I think one thing that we have managed to do is focus on exits. So to give you a statistic, we are about 2 to 2.5% of dollars deployed. If you look at any particular year or over the last 15, 16 years, we've deployed about $2.5 billion, which is roughly about 2.5% of capital that has gone in over this period. But we are about 10 to 12% of all exits that have been realized out of private equity. And the way that has happened is, we've been focused on getting an exit whenever an opportunity arises. I think it's human tendency to be greedy and to want more and to expect more. But I think you've got to also be disciplined enough to take the chips off when you feel valuations have run up and when your investment has performed pretty well. So I think that has been a learning. We've had instances where after we've exited, the valuations have run up even more, and you feel a little bad about it. But then when reality checks in back again, you're confident and you're comforted with the fact that you've made a good decision in making the exit out.
But that's one rule of investment. Once you have exited, never look back at that particular company or stock again and where the valuations are. But I want to bring in Arvind at this point. Arvind, of course, the point that Ashley was making about the exits and returns, that's paramount for any investor. Now, in the last few months, especially, we have seen a flurry of these block deals happening where, the returns have been hefty for the private equity players. But is that also a healthy trend going forward? Because that is dampening the private deals, the strategic deals that mostly the private equity, area is known for, that create value and then sell to another strategic.
Actually, that's right. That's only actually, if you look at it, strategic exits are only one form of exit for private equity funds. There are 5 or 6 other techniques, as you already know, IPOs, etc., block deals. So I think one should really not look at that negatively at all. It's a question of what price the private equity fund gets. At the end of the day, don't forget that the private equity fund's got to produce a return for its LPs. Right. But having said that, the good news is that, and I was looking at all the exits last year, almost 40% of all exits last year were in the form of strategic deals, i.e. sales to strategic corporates, sales in M&A transactions. I think that's a super trend. And the proportion of exits in the form of IPOs has declined actually over the last 4 or 5 years. So I think that's a very good trend. And the other thing that I just like to point out is that, and I was looking at one of the fund managers who's not with us here today, but I might as well name Renuka Ramnath to you. Yes. When she thinks of an exit, she does want to get what she calls to take the company to a high level even after she's exited. So she'd like to bring in a high caliber strategic partner into an entity when she exits. So there's a lot more expertise that's growing within the PE community in India. And we're seeing, as I already said, lots of strategic deals are taking place.
Oh, that's right. In fact, Arvind, so IPO market, that I see currently that the trend is again picking up in terms of exits via IPO. But you mentioned it, 40% have been to strategics. So that's a fairly healthy chance. But another area of equity markets that we see is growing and is at a nascent stage is also the fixed come equity returns kind of a combination in REITs and InvITs. Now, Yash, what do you have to say? Because, of course, Hines does a lot of REITs globally, but you aren't running any in India. Do you intend to do that? And how do you think this landscape is going to develop? Of course, the REITs market hasn't yet opened, but InvITs have, and probably REITs will follow.
True, and I'll answer that question in two ways. One, in REIT in general, and second, how I think the market will develop. I think REITs by themselves are a very positive step. It allows for fractional ownership of buildings in a much more organized manner, which keeps the buildings in the hand of professional management. So rather than a building being broken up into 100 parts with 100 different owners, which you see a lot of Connaught Place in Delhi about, it is rather that the building has one owner with 100 shareholders, which is what REITs allow, and we think that's a very, very positive step. We've seen it work very well in other parts of the world, and we are welcoming the same to India. We would be interested in looking at REITs carefully ourselves. It could be a possible exit for some of our investments. So that's from a point of view of as a product, I think it's a positive step for the market. With regard to how it'll fold out is anybody's guess. At the moment, we have some very good plays by Brookfield and Blackstone, and it seems from the press that they may be interested in the REIT exit, which could make a lot of sense. What is most important to be seen, and I think everyone's waiting in the wings for that, is how do these people price these REITs? How well do they really deliver on the customers' interests and the expectations that the customers who are buying into the REITs have? But if they do these well, I think it's probably the best way that commercial or income-producing real estate in India should be owned in the future, rather than the traditional way of going out and buying a small little office in a building, which then becomes nobody's building to own in the future, and the quality of the real estate dies.
Right. So, gentlemen, hold your thoughts. We'll have to slip into a short breather, but we haven't even touched upon the distressed asset space, which has given a lot of opportunity for investors really to come in, but we haven't seen much meaningful action yet there. So we'll take your outlook on that as well, and stay tuned to Big Deal.